Welcome back to another market review. I hope you've all had a good weekend and have managed to spend some time relaxing and taking your minds off the market. My routine to get ready for the week ahead is that I always check the economic calendar to see what sort of fundamental news events we should expect, and also to get an idea of what currency pairs are most likely to be the most volatile based off the fundamental news that is due to be released. And it's actually quite a quiet week this week. Aussie US dollar does come into the forefront during Thursday morning. We have employment change and unemployment rate, which is a great gauge of how well or how poor the economic outlook is on that country. And then we also have USD core durable orders. Don't actually expect much movement, but it's always good to be aware of what's happening. And then we have two speeches later on Thursday. These are all GMT times from Governor Polos of the Bank of Canada, and then Governor Lowe of the Bank of Australia, which are likely to move the markets. Now, what the difference between speeches and actual figure releases is that speeches, the markets are listening for certain phrases to be said. So the inclusion of a certain phrase or even the exclusion of certain phrases can determine where the market is going to be moving over the foreseeable future. And then we finish off the week with some quite highly important Canadian dollar news, core retail sales. That's likely to be a market mover. And then we finish off with President Draghi doing a speech on the euro. So it's quite speech heavy this week. We have quite a lot of minutes as well. So we had the monetary policy meeting, which is like the interest rates for Aussie 2 weeks ago. And 2 weeks after, you have the meeting minutes are released. Same for FOMC, interest rates of America. We have the minutes released, so not as heavily impact as the actual events, but the minutes will give the market some sort of indication of where we're heading over the next few months or so. So let's get down into the charts. Let's go over the EURJPY. So this was a pair that we spoke about last Monday on last Monday's market look ahead, and I think what the price was back around here. I think it was back around here when we did this video, and I said, there's two things. We're either going to look to short on a break of 124, or we're going to look to buy, or we're going to look to sell if the price was to retrace higher. So what we had was we put this Fibonacci in here, and we said to ourselves, if the price was to come up here, we could look to take a short out of this area to then target back down to the recent lows. And then if we broke those recent lows, D1 would be our target. So that's how we use our Fibonacci, because it's good for entries and it's good to pick our take profit levels. And then we can fast forward to see what actually happened. We had that break up higher. Again, not my style of trading to take any buys around here. Even though it did run into our Fibonacci zone. One thing to point out is I don't trade off the 61.8. I trade out of a Fib reversal zone. Mainly because I think a lot of retail traders get caught into only trading the 61.8. And I think it's becoming very obvious now that they just all put their stops around here. So more likely than not, you will see the market spike up into this area before dropping, rather than just spiking to 61.8. So obviously then we did see the price appear into our Fib reversal zone, where shorts could have been taken from here. Your stops would have gone 15 to 30 pips above the 78.6 level, and obviously your target would be, your target 1 would be back at the lows, target 2 would be 124, and then the D1 extension. So as you can see, that did play out very well. And the best way to manage your trade when you're in the position is to move your entry to break even as soon as possible. So right now, sort of when the market did break below the moving averages, you would have been about 40, 50 odd pips in profit. That's where I would have looked to take money off the table and move my stops to break even. Because not every trade is going to run all the way to your take profit. It's important to take your profit off the table the further the price moves down. So, and then obviously you can see what happened after that. This is a classic example of why it is important to carry on taking profits off the table. It's because we did actually reverse just just shy of our take profit level. But if you were taking sort of say 70% of your position off on the close of this candle and then had stopped at break even, now you would have been able to catch a decent amount of pips before the reversal came up. So that's definitely something to bear in mind when you are trading in the forex markets. Is, you know, every bit of profit, it does add up over say a month-long period. You want to be taking those 60, 70 pip moves, banking that profit, and then moving on. Because mainly anything from a psychological point, it's always good to see your trading balance increase, whether it be by $10, $20, $100, $1,000. It's always good to see that momentum going forward, and then it just breeds confidence for the next trade when you look to enter. So that was a nice trade. I hope some of you guys did take that. That analysis was made very clear on last Monday's Outlook. And now we need to see where we're going next. So for me, we're all up and about this counter trend line here, and we're at a break or bounce scenario. Now I do leaning more onto the favour of a breakout, but again, that bias won't be confirmed until we've had actual confirmation. Confirmation will be on a 4-hour candle close above the counter trend line before we get a retest. Look to go long there. Alternatively, we do get a rejection, which is then when we look to short this pair back down to 1.2400. So those are two setups in mind. We can see that we are forming these discrete swing points, these higher lows, which tells us that a new higher high can potentially be formed. So for me, that's where my bullish bias has come from. Also the fact that we did react very strongly from this level around the 12400, 12420 level. We rejected quite heavily, formed a new higher low, and we just need to be patient, wait for that 4-hour candle to break the counter trend line before going higher. Very similar setup for GBPJPY. Again, we played that fib move out. Nice rejection out the fib reversal zone, 71 level this time, and then the price simply melted from there. Profit should have been taken, or at least stops moved to break even around there, and then since then we bounced very heavily, very strongly off this level, which again is building that bias to the upside. So again, very similar, 4-hour candle, wait for that to break, retest, and the continuation look to move up to 145. Aussie pairs as well are definitely on my watch list. If you're part of the mentorship group, we actually took Aussie longs last week, and we're running about 43 pips in profit at the moment, hoping to extend up to target 1 at 0.72250. The reason why our take profit level is up there is I'd like to draw this fib from this point here down to this point, and we can see how well this key level lines up with our fib reversal zone, in particularly the 0.71 level. So that's where our targets were set. Entry was taken just off a simple breakout and retest. Up there, so we had this the price break up higher, pull back. I entered there, wasn't the best position, wasn't the best entry, sorry, because we did end up running down into some sort of drawdown. The better entry would be just to wait for that new higher low to form. But since then it has rallied very nicely, and the reason why I've drawn in this second blue box here would be if we did see the price pull back from here, then another long entry could be triggered like that to the upside with your stops just below the 50 EMA here, and that would yield a decent amount of pips. Let's just draw that in. Now just looking at a nice 3.2 to 1 risk to reward, 92 pips. If we did get that pullback, that's definitely something you should be looking to buy and take this thing higher. And then pound Aussie to finish off with. A little bit contradictory on the higher time frames here. Trade on FX, the way we trade is we focus mainly on the higher time frames to pick our overall bias before dropping down into the 4-hour and 2-hour time frames to find those entries. And what I can see here on the weekly is that we're forming this head and shoulder pattern where we've got the left shoulder, the head, and the right shoulder. The weekly candles, however, are quite restricted between the 1.800 and the 1.8250 level. So ideally we want to wait for a breakout of those levels before entering. However, because our bias from the higher timeframes is to the downside, we can still look to enter speculative shorts, maybe, let's say, to try and catch off 80 to 100 pips. And a move like that was presented this morning. We can see this counter trend line has been drawn in. We've had 1, 2, third touch this morning, coupled with a retest of intraday resistance, and also the 50 EMA. So I'm sure some of the members were alerted to this over the weekend, and it would have given a decent intraday position. You're looking at a 25 pip stop loss for an 80 pip gain, down to 1.800. The reason why, yes, because we are bearish, and then our downside targets will be down to 1.7750. But in an intraday position here, there's no point putting your targets there. Mainly because for our confirmation that the bears are really in control, we need a break of 1.800 to really confirm that bias. So that's why the targets, if you did take a short from up here, would just be down there. But that's a nice 80 pips to take. I think people need to be real and understand that 80 pips in the Forex markets is a very good achievement, very good amount of pips. And if you're focusing on a weekly target, anything between 80 to 120 pips a week is really, really good. And that's actually really hard to obtain, but then you can see that can come from just one trade. So less is more when you're trading these Forex markets for sure. And you just want to look for those high probability setups. And I hope the guys who are into mentorship are starting to tune their brain and tune their eyes into how the market actually moves and how it is best to pick those high probability setups. And also you guys who are following us on the YouTube channel, I hope what I talk about on these market reviews is sort of starting to change your mind from that of a retail trader to the mind of an investor, and see the markets for what they actually are. So in a summary, I want Aussie US dollar, looking for this to go higher this week. Pound Aussie, I would like to see this come lower. However, if we did see a break of this counter trend line here, then the price could very much rally higher. So if we looked and got, like say, a 4-hour candle close, then you could even long this pair up to 1.82500. It is important to stay fluid in the markets, but the higher time frames are telling me the bears are in control. So I wouldn't be surprised if it did just melt from here. Again, trading, it's all about those probabilities. You can have a bias in mind, but it's also always important to say, okay, yes, the price could melt from here, but if it doesn't melt from here, where's the next best price for the pair to rally to in order to collect those sell orders and then drop from there? And if we don't fall from here, the next best place to sell from would be back up at this key level here. So we need to keep that in mind. And then EURJPY, 2 setups here pending, waiting for that confirmation, whether it be a 4-hour candle close above the counter trend line to go long, or a 4-hour candle close back below the key level to go short. And same with EURJPY, looking for that break of the counter trend line to go long. So I hope these videos are helping you guys, giving you a bit more direction to your trading. And again, they're just sort of a way to introduce yourself to our style of trading. The mentorship is obviously a much more intensive form of this YouTube channel. There's multiple videos, multiple educational material uploaded daily. But just by watching these YouTube videos, you should get that understanding of how we trade, and whether you're just looking for trading to be just to earn a little bit of extra money every week, or whether you're looking to retake it full time. The mentorship is definitely there, and it's definitely a tool that the serious traders amongst you should be looking to utilize over the next coming weeks or months.